transaction can happen. But in a case like that, it's analogous. It's basically the same as if you sold the car, right? If you sold the car for more than you originally paid for it, that's a capital gain. So that would be income. It would be unusual, but that would be it. Often when we do taxes for people, we have to look at cases like this and apply our logic and say, okay, what makes sense here, right? So these kinds of questions are kind of the heart of what I do as a tax professional. People bring me unusual things. I say, let me think about that. How would we treat that? How would we handle that? All right. Yes. And Rachel had a question. Net income, can total income can be considered gross income? Gross income is a specific term which is used in a different way on the tax return. So you can consider total income as analogous to gross income, but gross income is used in the tax return specifically when we're talking about things like business income and rental income and so on. So total income has a very specific meaning in the tax return. So I like to avoid referring to it as gross income. You can think of it in that way, but generally, but just remember, total income has this very specific meaning in taxes. If your net income is your total income minus deductions, why is it not the same as your taxable income? Why is there a second round of deductions? Now, that's an excellent question, Alexandra. To illustrate, I think, when we look at the form itself, I think that should become more clear. Are we ready to... Let me see how far along that. Yes, I have one other knowledge break before we get to showing you the form, at least a little bit. But hang on to that thought, Alex. So, let's see how much you guys know. How many pages is the current income tax and benefit return? And if you don't know, just take a guess. Oh my, lots of guesses. Okay, good. This helps me understand where you're coming from. So, I think to answer this question a little better, I think it will help if we have some definitions. So when we refer to the income tax and benefit return, we are generally referring to just the main form. And this is what always must be submitted to government. This is the minimum form. And currently, the T1 form, because sometimes we just call it the T1 for short, but the technical name is the income tax and benefit return. Currently, this form has 8 pages. It has had different numbers of pages in the past. This is not a records management course, so I'm not going to take you through the history of the form too much, although in our next session I'm going to show you a little bit of how it's changed over time. This form must always be submitted. If you are filing taxes, you have to at least send in this form. Now, if it is generated through a computer program, like eFile or NetFile, you may have a shorter version of the form. For that form, it may compress it down to 4, but usually what happens then is it takes steps 2 through to 5 and compresses them onto a single page. So that's called the T1 condensed. So you might see that, but basically that's just removing all the lines of the form which are blank and just keeping the numbers, and then some poor schmo at the CRA has to manually type in all the numbers. So, but essentially that is a condensed version of the 8-page form. Now, there are some minor variations by province. which we'll talk about momentarily. There are also some minor variations for unusual situations. So non-residents use a slightly different T1 form. There are some special purpose T1 forms. When someone dies, for example, there's a T1 called a return for rights or things, but you don't need to worry about that. The main thing is, when we're talking about T1 in this course, we're just talking about the basic income tax and benefit return, and that is 8 pages long. There are some other terms which we're going to use a lot, and I'd just like to define them in the class. These are also in the textbook, but might not jump out at you. When we talk about schedules, these are required forms that must be submitted with the T1 if you are using them. So, for example, if you have capital gains to report, you need to complete the Schedule 3 and include it with the return. If you have if you're claiming certain personal credits, you might need to complete a Schedule 5 or a Schedule 2 and include them with the form, and so on. So schedules, these are not always present, but if they are present, they have to be submitted. You can think of them as basically extensions of the main form. So when you say, the number is higher than 8, from 30 to 80 pages, that's where these higher numbers come in. Because if you're thinking of the whole return, well, is the return just the main form, or are we also including the schedules and supplemental things as well? The full thing, for many people, can easily be 20, 30, 40 pages if we include every single one of these forms and every single one of these schedules. In order to reduce the amount of physical paper that the CRA has to handle, though, they have put in some guidelines. Here's what we want you to send. Here's what we don't want you to send. And in particular, they don't require you to send receipts up front often. They just want as little paper as possible initially, and then if they want more information, they will ask you for it. Other useful terms here, worksheets. These are supplemental forms used for calculations. They are not normally submitted with the main form. Often when our schedule is retired, the government says, we don't really need this schedule anymore. The calculations will be added into the main form, or they will be put into a worksheet. So, for example, there used to be something called a Schedule 1. That has now been incorporated into the main form. There used to be something called a Schedule 4. That has now been incorporated into the worksheet, and so on. So when we talk about worksheets, so these are extra forms, but you don't send them in with a return. The other term we're going to throw around a lot is T-slips. If the form name begins with a T, the T, you can think of it, it refers to income tax, as opposed to a form that begins with an RC for refundable credit, or XE for excise tax, or what have you. But when we specifically refer to T-slips, we normally mean slips where income is reported. So a T4 is income from an employer, T3 is income from a trust, a T5 is interest income, typically from a bank, and so on. So when we're talking about T-slips, for short, normally referring to slips with income on this. There are other forms that begin with T, but T-slips, when we use that term specifically, we're normally talking about income forms. So with that in mind, let us have a look at the T1. So now this is the generic version of the T1. I will look at, in our next class, we will look at the British Columbia version of the T1. As we saw earlier, there are different provincial versions of the T1, depending on the province. British Columbia has its own. And again, as we saw earlier, there is a specific generic version. In the fillable forms package, there's a generic version, which is used in certain provinces. So Nova Scotia, New Brunswick, Alberta, Manitoba, Saskatchewan. That is called the 5015, because it's a generic version used by all these provinces, which are the same. And don't have an individual provincial variation. So this is that form. On the slides, I'm going to just go through in a broad way, although if I need to jump to the form, I can here. So, and you can also follow along in your form on your tablet, of course. So let's go back one page. Get back here. Because right now, what we want to do is just show you the layout of the form. So page 1 and 2 of the form are used for information purposes, as I say. So this is step 1 of the form. And again, the little 5015 code is down here at the lower left. So even if you didn't, up here, the province wasn't listed, you could also have a look down here to figure out what the name of the code is and what year it's from. Although normally they will say up here 2024. So it's T1 from 2024. Step 1 is used for identification purposes. So your identification, your marital status, your province of residence. We're not going to go through this in great detail today. That's going to be in our next class. And then on the next page, there are supplemental questions about Elections Canada, if you have investment outside Canada, Canada carbon rebate, and so on. So that is step 1 of the return. Step 2, total income. This is where we total up all the income. So you can see the way it works. Everything in this column, which has a plus sign, is added together. Everything that's over to the left is reported for information purposes, but is not added in. So you can see it's actually pretty clear what you have to do with the number. You add it up, you add it up, it added up, like a flow chart. You can see here, there are some fields which are labeled gross. So for things like business income, fishing income, you enter a gross amount here and then a net amount here, and then it is put over here. But once we've added up all of the various income from all the various specified sources here, then our total income is at the bottom of the page on line 15000. That is then transferred to the top of the next page, and then all of our various deductions are totaled up here, and then all the deductions are deducted here and here to give us our net income on line 23600. Now, why is net income different from taxable income is an excellent question. And the reason is net income can be higher than taxable income because there are some things which are included for net income that are not taxable. In particular, social benefits. So workers' compensation benefits, social assistance, supplements. We're going to talk about these in more detail later, but these are included in total income and they are included here in net income so that they are included when the government calculates how much GST benefits you receive, and then they are deducted in this stage here. So along with a few other things. So the net income amount is added up here. Then we have a few other deductions which are deducted here to give us our taxable income. As you can see, there are fewer things here. Most income included in net income is taxable. There's only a handful of other things which are not going to be taxed. But then our taxable income amount is down here at line 26000. Then, and again, we're just doing this on a very high level today. So that's step 4. In step 5, we take the taxable income figure from here and we drop it into this diagram where we apply the various tax brackets, and then we use this to determine the federal tax. Then we calculate a total of what are called tax credits. You can think of these as amounts which will cancel out the tax. All the tax credits are totaled up here in step 5B, and the tax credits number shows up here at line 35000. And again, we're going to be going through this in more detail later. So the tax from step 5A, we deduct the tax credits from step 5B, and then in step 5C, we add a few unusual tax credits, a few other things to give us our net federal tax here at line 42000. In step 6, we bring in our provincial tax, and then we bring in refundable tax credits, which are deducted from the total payable down here. The total payable moves up to here. We add together refundable tax credits here to give us our final number, which is a refund or a balance owing. If it is a negative number, it is a refund, and the government owes you money. If it is a positive number, you owe the government money. And again, from the government point of view, they want you to get to the end of the year at 0, but as a practical matter, that often doesn't happen. But that's the overall overview of the tax form. And our methodology is we're going to be going through this in more detail over the next few classes. So don't worry, I know that was fast. It's just meant to be a really top-level overview. But this is our methodology. We're going to go through step by step, stage by stage of the tax return. And as we do, we're going to introduce more and more concepts until by the end of our 6th class, you're going to be able to complete an entire tax return for a basic situation where someone just has employment income and things related to employment. Then in our subsequent classes, we're going to be looking at more complex topics, more complex kinds of income, more complex kinds of deductions and credits, and so on. But we're going to begin with the basics. We're going to learn to walk before we run, and so on. All right, now questions here. The T1 for 2024 is all income in 2024. Yes, so a good question. But yes, that's exactly right. This form only reports things from the calendar year 2024. There are a few exceptions, which we will come to in the course. Sometimes we can pull things from previous years into the current year, but yes, particularly for income, just think of it as we are restricting ourselves to the 2024 calendar year. And this is because other calendar years, the rules and tax brackets and deductions may change slightly. So 2025 will have different tax rates. So always when you're doing tax, you want to be, and this actually is a concern. You have to be careful when you're doing taxes. Sometimes someone will hand you a stack of T4s and not look closely at them, and when you look at them, you say, oh, wait a minute, this is from 2023. Or if you open your tax software and you're tired and you're not paying attention, you may start putting a bunch of information into the tax year, and then you see, oh, wait, I have the wrong year open, and I'm entering all this 2023 stuff into 2024. So it is something you do have to pay attention to when you're working on taxes. Okay, other questions here. Ali Risa, I think you're answering an individual question there. So for gross income and net income, yes, normally you submit a schedule or a supplemental form showing your calculations for gross and net income. We're not going to deal with very much of that in this course because those tend to be very complex topics. But we are going to be dealing with some basic examples of this, which are important. But yes, in this course, we're going to be dealing with more straightforward things. But yes, that's right. That's what you do. For business and rental, you prepare a separate form. And there's a lot of individual rules around that, which we're not going to have time to get to in this course. But, we can talk about it in a general way. What if someone submits one T4 twice? So, for example, they give me two identical T4s. As a tax professional, you have to keep an eye out for that. Normally, it's obvious if you have two from the same company and for the same amounts. Then you have questions to ask. Errors can happen with T4. Sometimes the employer will submit the wrong T4 to the government, or what they send to the government doesn't match what they give the employee. So this is something we have to watch for when we're working things. Ambar, we're going to talk about medical expenses more in a future class, but the short answer is yes, but we will talk about that in a future class. How many years can you go back? The answer is 10. But again, we will talk about that in a future class. Don't worry, we're gonna talk about a lot of these things in future classes. But these are all very good questions. Good. You're getting the idea. Excellent. All right. So on that note, I want to talk a little bit about filing methods. I will answer that in a few moments, Dean. Remind me if I don't. So when we're filing taxes, there are currently 4 methods to do it, as we touched on earlier. The paper file, you mail the return to the CRA, you physically attach the required schedules and the required T-slips and so on. E-file, this is when you bring your tax return to someone like H&R Block, and we electronically transmit it for you. Needs to be a registered e-file service provider. Every company which does this is registered with the CRA. Every tax associate is registered with the CRA. I have an individual CRA identification number. Any tax return which is filed by me has my code number associated with it. The CRA can track what I have filed and what I have done. NetFile is when you use software at home. That software has to be approved by the CRA. It has to be NetFile certified. You can't just compile your own software and try to submit taxes. And the software needs to meet certain standards and requirements set out by the CRA. Simplifile is a relatively new service. You have to be invited by the CRA to use it, and it is intended for people whose returns are extremely simple. So these are cases where the CRA knows or strongly suspects that this is a person who probably doesn't have anything complex going on in their return. Probably it's someone who only receives government benefits, has no other source of government income, and has only been receiving government benefits for years, so there's no reason to expect there's anything unusual. So for taxpayers in this situation, they can use the simple file option and file by phone or digitally or by paper. However, this is still a very new option, and less than 75,000 of these were done last year. So that's less than 0.25% of all the tax returns filed. But the government is encouraging people to go in this direction because for some people in simple situations, their taxes just aren't that complicated, and they're not going to be submitting anything that's very different from what the government already has on file. So the whole self-assessment portion of it doesn't really give them any advantage, doesn't really the government any advantage. So they have the option of going the simple way. But this is still a very new system being brought in. Now, with paper returns, the number of these is steadily dwindling. The CRA is trying really hard to discourage paper returns, but still between 1 and 2 million of these were submitted last year. The main difference between e-file and NetFile is when it's e-file, a third party is preparing the return for you. If you come see me at H&R Block, I use e-file software and I e-file the return. So when it goes to the government, it's clearly marked on the return that H&R Block prepared the return, and that, Brian Clark with CRA Rep ID, whatever, is the person who prepared it, but we handle the transmission, and we have to meet certain standards and collect certain documents and authorizations from the client. With NetFile, you are doing it yourself using software, typically do-it-yourself software. H&R Block does offer do-it-yourself software, which is more or less free. If you want someone like me to get involved, we charge a fee for that. But the basic idea with NetFile is you are doing it yourself and you are taking the full responsibility for it. But otherwise, both e-file and NetFile have to meet certain CRA standards and submit the data in certain ways and certain formats and so on. All right. In general, the number of paper filings is decreasing. For companies like H&R Block, we are required to electronically file things if we can, and we are financially penalized if we send something in on paper, which should be sent in on e-file. So for us, normally, we only send something in on paper if we are required to send it on paper, or there is some kind of technical reason where it's impossible to send it in by e-file. For you as a citizen, you, of course, always have the right to file on paper. The government has made a couple of moves in the past to try to get rid of paper filing, and it hasn't gone anywhere because that is very unpopular to get rid of that. Do I have any example certified software that I usually use? I can't really speak to that because I only work for H&R Block, so I only use our certified software, which is called Block Pro, and you're going to have a chance to use that a little later in the course. But if you want to do it at home, if you're not working for us, then we have do-it-yourself software offered through our website. Is the T183 only required for e-filing? Yes, it's only for e-filing. Is the short answer to that. But we're not talking about that just yet. So, but for anyone wondering, a T183, Onyema, yes, a T183 is an authorization form. Essentially, it's signed by the client, and they say, yes, I, the client, agree that I am filing this return with H&R Block, and they are authorized to file it electronically on my behalf. It's a very important form. The CRA will levy penalty on companies which do not collect and retain this form. And I'm not going to go into that, but you can assume that companies which do not keep these forms and keep a good record of these forms would face penalties. If they were not maintained in the proper way. So the CRA has been known to come by a company or come by an office and say, we want to see this box of your returns and look at your returns from March and make sure you've got all of these T183s. So it's a very important form, but not in terms of doing the tax return itself. It's more doing taxes for somebody else. So it's not really part of this course, but we will kind of mention it in passing. But that's basically what it is. It has some very basic information about the tax return, about the taxpayer's address, name, address, and what they want done with the return. And then this is sent to the government to tell the government that, yes, this person authorized us to file the return. Now, someone was asking about T4s and how we can tell if what the government has is different from what the taxpayer has, which is an excellent question, by the way. So the CRA offers various online tools. So the big one you may be familiar with is My Account. My Account is a service you have where you can sign in to the CRA, and you, the individual, can access your individual tax information. So for part of the year, if I'm not actively working on tax returns with H&R Block, my CRA access is kind of paused. So if I'm not actively working on if I'm not working for H&R Block, say, I still have my CRA rep ID, but I'm not authorized to go look up client information for anyone if I'm inactive. But I can still go up and look up my information using My Account, right? So for each of you, you can use My Account to go online and look at your various CRA tax information, update your various address information, and yes, exactly. You can get the notice of assessment from My Account. You can download that. My CRA is essentially the app version of My Account, so you can, if you trust your phone, you can get all this information over your phone. My Benefits CRA is another app, and this allows you to look at benefit information only, so your GST credit, your Canada Child Benefit, and so on. Represent a Client is the H&R Block version of My Account. So this is what I use when I'm looking up client information. So when my CRA ID is active, I can look up information for a client, and I can download information from someone. One of the things we often do for people is if they're having issues with My Account and they can't get into My Account, they come and see us, and fundamentally, because I can look at them, check their ID, and say, why, yes, Mr. Smith, that is really you, and if you authorize me, then I can download information for you using Represent a Client. Related to that is a service called Autofill My Return. It's replaced an older service called Send. In Autofill My Return, we can download CRA information directly from the CRA and put it into our tax software. And that includes T4s. So what can happen then is I can download someone's T4s, put it in the software, and then when I compare that T4 to what the client has on hand, sometimes there are differences. The most common difference is the government will have a different number of T4s than what the client's given me. So if a client has more T4s than the government has, it means they're not on file with the government yet. If the government has more T4s than the client has, well, maybe the client hasn't received them yet, or the client forgot about them, or things like that. And so then I have questions to ask. But yeah, represented client is the main way that we kind of double check someone's T4 information and see if there's something wrong. Sometimes T4s and T-slips have an obvious error. So a client will hand us a T4 and there are blank fields on it, or it's got the wrong social insurance number and things like that. But some of them you can only tell when you've downloaded it from the government. All right, now you're asking about the NOA, the Notice of Assessment. I'll answer that question in a moment, Dean. For the Notice of Assessment, for anyone who's unfamiliar, after you file your tax return, after you send it to the government, either on paper or electronically, and they've processed it, they send you back this document called a Notice of Assessment. So this is a summary of the tax calculation, explains any changes they made, and it has your RFP information, the most up-to-date version, and this can be sent back on paper, either on paper in the mail or electronically through my account. Now, there's an example in the textbook, and I think we've got time to have a look at that. So this is, no, not that one. Here we are. So this is illustration 1-4, which should be down here. Okay. And notice you can navigate the textbook very easily using these bookmarks here on the left. So here's an example from 2023. So you can see it has the social insurance listed number at the top, the tax year, the date it's issued, it's got your name and address on it. They put X's on it. The heck? My screen just went black. I assume you see that too. Why did my screen just go black? I hope it didn't lose the connection. Okay. I'll give it a second. Okay, I'm not going to spend a huge amount of time with that because we're nearly into class. But yeah, you can have a look at the Notice of Assessment in the textbook. Yeah, the screen is tired. Yeah, I don't know why it's loading. But everything else seems to be working. I can still see you guys, so I assume it's not my connection and it's just something going on. Maybe someone's uploading it. I don't know. Anyway, so the important thing with the Notice of Assessment, let's go back to that for a second. The screen is tired, yes. I think it's more my browser, but anyway. So it's got a summary of the tax calculation, the explanation of any changes. So sometimes after you submit the tax return, the CRA will make changes to it. It's very important to look at that closely because some of them may be incorrect. The CRA has been known to make mistakes, and sometimes we have to push back on that. RSP information, it'll tell you how much you can put into RSPs in the next year. We'll talk more about RSPs in a future chapter. Now, on the electronic side of things, there's been a new development. There's what's called an express notice of assessment. Now, this is important because sometimes banks, if you want to get a loan, want to buy a house, they want to see your notice of assessment. So you have an ability to immediately get what's called an express notice of assessment. So with participating software, you get an instant assessment results after filing a return. So well over 99% of returns are accepted by the government, at least initially, as filed. They don't require you to make changes right away. So in that case, they know what the assessment is going to be. It just has to go through their internal processes before they send you a bill or send you a refund. So with express notice of assessment, then you can get your notice of assessment. So I might file my taxes on April 3rd and instantly on April 3rd get my notice of assessment, but the notice of assessment will have a date of April 10th on it, say. So normally, well over 90% of cases, it's going to be available immediately. The CRA does have the ability to delay an assessment if they want more information, but generally that's less than 1 in 100 times. So it's unusual when that happens. If you use this service, the CRA will consider that they've already sent you the notice of assessment, and they will not mail you the notice of assessment. And they don't send you any messages about this unless you've also signed up for online mail with the CRA through My Account. So while it's technically possible to request the express notice of assessment without signing up for an online mail, it doesn't really work, so we don't recommend that. But in general, the idea is you can then just access your express notice of assessment online through My Account, and you don't need to wait by the mailbox for 10 days. Now that looks like a good question. For a new person, how can you log into My Account? Well, that is the trick. When you are new in Canada, you often have to file a tax return before you can create My Account because the CRA has no information about you. Or if they do, it will be very basic immigration information. So for a young person, say like my son who's never filed taxes, all the CRA knows is his social insurance number. But he's never filed the taxes, he has no income, so they have no way of verifying who he is or setting up any of the security checks to make My Account. So if you're new in Canada, it can be very difficult to set up My Account unless you take the initiative and write a letter to the CRA and things like that. Normally, you have to file a tax return in order to kind of get on their system, get registered on their system, and then once they know who you are and they have some ability to check that your identity remotely, then you can open up My Account. So generally, that's how it's done. I suspect in unusual cases where someone needs to set up My Account before filing a tax return, you would have to contact the CRA directly and see if that's possible, but that would be very unusual. And further question, if you're working with an accounting firm, do you need to provide them a CRA rep ID? If you're working on taxes, if you are preparing taxes and submitting to the government, they will generally ask for a CRA rep ID. Normally, they will help you attain that. So I didn't have to worry about that myself. H&R Block, my first year with the company, they helped me through that. They said, we'll handle it. We need this from you, Brian. And then they sent it off to CRA. And then I got that. So, but yeah, that's generally part of it. All right. One last thing. You file on paper, you got a refund check. Can you get access to My Account? Yes, you can apply online for that. To get My Account set up, generally they need to verify that it's really you. So they need to say, aha, if it's really you, you should be able to give us the amount on line 23600 of your tax return. And then you could say, why, yes, the amount on line such and such is this, right? So yeah, once you've done the tax return, you have the ability to answer those kinds of questions. So generally, you can set up My Account at that point. Even if you haven't set up My Account, you can still come into some ways like H&R Block and ask us to use Represent a Client to look at your account. But a lot of things are just easier and faster if you can access them yourself through My Account. All right, one last thing before we wrap up for the evening. We want to talk about records and receipts. So bear in mind, when we're sending stuff off to the government, you don't always have to send receipts, but you do have to retain them. Official receipts are required for many deductions and credits. And what I mean by official is that it's not sufficient if I have a credit card statement saying that I gave $100 to charity. I need the official charitable deductions receipt from that charity. The CRA will not accept it otherwise. And the onus is on me to prove that I made that donation. The CRA randomly reviews returns and requests supporting documentation. So in the interest of keeping everything moving, they do not check everyone's return every year. That said, certain kinds of returns are more likely to get checked where the CRA will ask for documentation. So in any dispute, the CRA is going to be presumed correct unless you can provide this documentation. You should keep records for at least 6 years, and I would suggest even 10. 6 is the minimum. That is the standard federal records retention period. But you can make changes for up to 10 years. And sometimes you will have unusual situations where you need to go back and change something that's 10 years old. I've just come up with something like that in my family where I need to make a change to a return from 2015, and the software is suggesting, oh, do you want to make a change to your to a specific credit for that year? And I'm like, well, no, because there's no way I still have those receipts, so we're just going to leave those live. So 10 years is kind of the maximum. A minimum, keep things for 6. Again, just in case the CRA asks to see them. All right. Last thing before we wrap up for the night, let's finish with one last poll question. And again, the polls just help me gauge everyone's knowledge. Let's open this one up here. All right, so let's see how closely you are paying attention. So, true or false, it is possible that a taxpayer's total income, net income, and taxable income are all different amounts. Well, let's see how well you remember. And let's see if anyone's fallen asleep. And again, I'll give you about a minute. All right, 20 more seconds. Oh, I'm liking how these answers are shaking out, but there's still a few people who haven't submitted yet. Just a few, though, meaning almost everyone is still awake, and that's great. I know the sound of my voice can be soothing after a long day, so if anyone dozes off, I'm never going to be offended. But it looks like most of us are here. And yeah, okay, well, that's almost everybody. So, and I'm pleased to say that everyone who answered got it correct. Yes, the answer is, of course, true. It's entirely possible that these numbers are different. If you have total income and then you have some deductions, you can have a different amount for net income. And if you have some deductions for net income, you could have a different number for taxable income. The key thing to be aware of, though, is that not everyone will have deductions. It is entirely possible for someone to have no deductions, and so their total income is the same as their net income, is the same as their taxable income. That's not unusual, but it is entirely possible for these 3 numbers to be different. And that's because they have 3 different purposes. Just bear in mind that the biggest number is always going to be total income, and then net income and taxable income, if they are different, they will be smaller. But remember, 3 different numbers used for 3 different purposes. Right, so on that note, we always end each class with a chance for any questions. If you have any questions, feel free to ask. And, oh, thank you, that's very kind. Now, we are close to 9 o'clock, I think, if not at 9 o'clock. Yeah, we're at 9 o'clock, so I always like to end close to 9 o'clock. There's one last thing I want to show you. If you have any questions, feel free to ask. I do always hang around for a few extra minutes. But for next class, just to review these are our learning objectives. So remember, you've now learned how to explain the key features of Canada's tax system. You've learned how to determine who's required to file. You've determined what income is subject to tax. You now know the difference between total income, net, and taxable. You know the due dates, and you know the online tools. Right, everyone, have a good weekend. For next time, review chapters 1, if you haven't already, and 2 of the Inc. Doc, and then look at chapter review problem 2-1 and 2-2. We are going to cover those in the next class. All right, good stuff. Good work, everyone. I'm going to keep the room open for a few minutes if anyone has some questions. Thank you all. You've all been wonderful students tonight. Ali Riza, let's pause it there. So thank you, those of you